Good morning, everyone. How are you guys? Are you guys ready for today's meetings? We shall start, correct?
Good morning.
Yes.
Today's meeting is extremely important because the CEO has requested us to evaluate the project cash flow before launching Nova Blend Pro. Our responsibility today is to analyze the project using 3 financial approach before making our recommendation. The approach are top-down approach, bottom-up approach, and tax shield approach. After the discussion, we will decide which one analyze the company should proceed with the product launch. I now share today's agenda. Let me share today's agenda.
Thank you, Ms. Najiha. I think using more than one approach is a smarter choice because relying on only one method might not give us the full picture.
I agree. Since Nova Blend Pro is a new product, it's quite difficult to estimate the cost accurately. If our estimates are off, it could affect the whole project.
I agree. The tax savings generated from depreciation and interest expense will improve our overall cash flow and strengthen the project financial positions.
If everyone ready, I'd like to invite our revenue analyst, Ms. Nisha. Ms. Nisha, the floor is yours.
Thank you, Ms. Najiha. Good morning, everyone. I'll now share my presentation. The top-down approach begins by analyzing the overall market before estimating our company's sale. So based on the current market research, portable kitchen appliances have become increasingly popular due to its growing demand for healthy lifestyle and convenience. Nova Blend Pro is specially designed for university students, office workers, gym enthusiasts, travelers who need a portable blender anywhere. So based on the market survey, we estimate that we can sell approximately 2,000 units during our first year. So selling price is 250 per unit times with 200 units equal to 500,000 ringgit Malaysian. Therefore, our projected annual revenue is 500,000 ringgit Malaysian. The main advantage of this approach is that it allows us to estimate revenue quickly by analyzing market size and consumer demand. However, one limitation is that this approach may overestimate revenue if actual customer demand is lower than expected.
Thank you, Ms. Nisha. Does anyone have any question?
Yes, thank you for your presentation. But I have one question. Suppose customer demand decrease because competitors introduce similar products but at a lower price. So how would this affect our projected revenue?
That's an excellent question. So if customer demand decreases, our sale volume will also decrease. For example, instead of selling 2,000 units, we may only sell around 1,600 units. So 1,600 units times with 250 ringgit, we can only earn around 400,000 ringgit Malaysia. So as a result, our projected revenue will decrease from 500,000 ringgit Malaysia to 400,000 ringgit Malaysia only.
From a tax perspective, higher revenue also means higher taxable income. That's why we need to be careful not to overestimate our project. So, would it be fair to say that the top-down approach is useful for initial screening but not sufficient on its own?
Exactly. It's fast and useful for strategic planning, but it should always be supported by a detailed cost analysis to ensure the estimates are more realistic and reliable.
Thank you, Ms. Nisha, for the insightful presentation. Your analysis gave us clear understanding of the expected market demand and project revenue. Now, I'd like to invite our cost analyst, Ms. Fatin, to explain the bottom-up approach. Please proceed.
Thank you, Finance Manager, Ms. Najiha. Good morning, everyone. I will continue to explain the bottom-up approach. Unlike the top-down approach, the bottom-up approach starts by identifying all production costs before estimating profitability. This approach focuses on every expenses involved in producing Nova Blend Pro, allow us to calculate the project cash flow more accurately. Based on our production estimate, we have identified three major cost components. Our first cost is direct materials amounting to 100,000. These include the blender jar, stainless steel blade, rechargeable battery, USB charging, packaging material, and other production components. Secondly, direct labor is estimated to 50,000, covering salaries and wages for assembly workers and quality control personnel. Lastly, manufacturing overhead is estimated at 30,000, including electricity, factory rentals, machine maintenance, and other indirect manufacturing expenses. Therefore, our total operating cost is 180,000. If we compare this with our projected revenue of 500,000, the company still has sufficient margin to cover operating expenses and generate positive cash flow. But one major advantage of the bottom-up approach is that it provides a detailed breakdown of costs, making budgeting more accurate. However, this approach requires more time because of the costs must be estimated carefully. That's conclude my presentation.
Thank you, Miss Fatin. Does anyone has any question?
Yes, I have one question. Considering the current economic situations, raw material price may increase unexpectedly. What would happen if our material costs increased by 20%?
That's a very relevant question. Let's calculate the impact. If the material cost increased by 20,000, our total operating cost will increase from 180,000 to 200,000. This means our project will become less profitable. Therefore, we should negotiate with supplier or purchase materials in bulk to reduce the cost fluctuation.
Thank you. That makes perfect sense.
I would also like to ask a question.
Please go ahead.
Beside material costs, which expense do you think is the most difficult to control?
In my opinion, labor costs can also become a challenge. If production's demand increase significantly, we may need overtime works or hire temporary workers, which will increase the labor expenses. Therefore, production planning is very important to control the cost efficiently.
Thank you.
Excellent discussion. Your analysis shows that cost management is equally important as revenue generation. Now, let's move on to another important financial factor, which is tax savings. I would like to invite our tax advisor, Miss Mira.
Thank you, Finance Manager, Ms. Najiha. Good morning, everyone. Today, I will explain the tax shield approach and how it improves the company's cash flow. A tax shield refers to the reduction in taxable income through deductible expense such as depreciations and interest expense. Although this expense reduce account profit, they'll help the company pay less tax, which ultimately improve cash flow. For Nova Blend Pro, the annual depreciation expense is estimated at 15,000 ringgit, while interest expense is 5,000 ringgit. Therefore, the total tax deductible expense amount to 20,000 ringgit. Since the corporate tax rate is 30%, the tax saving is calculated as follows. So you guys can look at my slide. Tax saving is 20,000 ringgit times with 30% tax equal to 6,000 ringgit. This means Nova Global Corporation will save 6,000 ringgit in a tax. This additional cash can be used to support operation, investment in marketing, or improve future product development. Therefore, although depreciation is a non-cash expense, it provides a real cash flow benefit through tax saving. Thank you. That's all my presentations.
Thank you, Ms. Mira, for your detailed explanation. The tax shield approach clearly demonstrates how tax savings can improve our company's cash flow. Does anyone here have any questions?
Yes, I have one question. Besides depreciation and interest expenses, are there any other expenses that can provide tax benefits to the company?
Very good question. Yes, there are other deductible business expense such as employee salaries, rental expenses, utility bills, and certain research and development expense, depending on tax regulations. However, for today's analysis, we are only focusing on depreciation and interest expense because they are directly related to our investment decisions.
Thank you for the clarification.
Excellent. Thank you. We have now completed the 3 financial approaches. Before making our recommendation to the CEO, I'd like to invite our financial planning executive, Ms. Umaira, to summarize today's findings.
Thank you, Ms. Najiha. Good morning, everyone. So based on today's presentation, I have prepared a comparison of the 3 approaches used to evaluate the Nova Blend Pro project. Right, so the top-down approach helped us to estimate our projected annual revenue based on the market demand. So we estimated total revenue of 500,000 ringgit from selling 2,000 units of Nova Blend Pro. Alright, next, the bottom-up approach. It gave us a detailed estimate of production costs. So we calculated total operating costs of 180,000 ringgit, which include direct materials, labors, and also manufacturing overhead. Finally, the tax shield approach. So the tax shield approach showed that depreciation and interest expenses provide a tax saving of 6,000 ringgit, which increases the company's available cash. Okay, so after comparing all these 3 approaches, I believe each provides different but equally important information. So instead of relying on only one method, I highly recommend to combine all 3 approaches when evaluating the Nova Blend Pro project. So this will allow management to make a more informed financial decision. Thank you.
Thank you for your recommendation. Before we conclude today's meetings, I would like to hear everyone's final opinion.
Based on market demand, I believe Nova Blend Pro has strong sales potential. However, continuous marketing effort will be essential to achieve our projected revenue.
From a cost perspective, the project appears financially feasible. Nevertheless, we should closely monitor material price to avoid unexpected increase in production costs.
I agree. The tax savings generated from depreciation and interest expense will improve our overall cash flow and strengthen the project financial positions.
Overall, I believe Nova Blend Pro is financially viable. And by combining all these 3 approaches, management will have a more complete understanding of projects, risk, and also opportunities.
Thank you everyone for your valuable contributions. Based on today's discussion, we have reached the following conclusion. After considering the projected revenue, estimated operating costs and tax savings, we believe that Nova Blend Pro is financially feasible. Rather than relying on only one approach, we recommend using the top-down, bottom-up, and tax shield approach together because each provide different but valuable financial insights. Therefore, our recommendation to the CEO is to proceed with the launch of Nova Blend Pro. If there are no further questions, I would like to thank everyone for your excellent preparation and participation. Your analysis and recommendations will be submitted to the CEO for final approval. Once again, thank you for your cooperation. Have a wonderful day. This meeting is now adjourned.